Government data showed orders for durable goods climbed more than forecast in February. I'm joined down the line by Tim Price, Director of Investment from PFP Wealth Management, to discuss what this means for production and manufacturing in the US. Tim, thank you for joining me. Durable goods came out at 5.7% today, better than expected. Do the results today reflect an economy on the mend?
They look, to be honest, like a bit of a mixed bag. Certainly the headline durable goods orders figures was better, 5.7 versus, I think, expectations of around 3.9. And there does seem to have been an extraordinary surge in bookings for commercial aircraft. So it looks like Boeing had orders for something like 179 additions to the fleet in February, compared to 2 for the previous month. If you strip out transport, though, the actual figure came in at down 0.5 versus expectations of up 0.6. So like I said, it's a bit of a mixed bag.
So are you saying this so-called Boeing effect, the rebound in demand for commercial aircraft, has made a difference to goods orders?
Well, there seems to have been a bounce back certainly from January, but beyond that, you know, the transportation figures are always volatile. So I think you probably need to see it in a broader data set.
US orders for machinery surged at the start of this year. The gain showed businesses remained confident in the economy, even after tax increases and government spending cuts were looming. Do the results today suggest this is a trend that will continue?
It's difficult to say. Obviously, one sort of glass half full factor is that you seem to be seeing some degree of growth, even in the context of an economy that requires more fiscal adjustment. So to the extent that, you know, I mean, we're still talking about ultimately an economy that's the world's largest debtor country. So they need to address, I mean, the U.S. national debt stands at 16 trillion and change, and that's just the on-balance sheet stuff. I'd be minded to look at, what looks like reasonable data in the context of a much bigger sort of adjustment that needs to be made to address that fiscal overhang. So I'd be tempted not to view this as an unmitigated good news just yet.
Yesterday, Fed Chairman Ben Bernanke reiterated the Federal Reserve's low interest rate policies are helping to boost growth around the world. But some critics have argued that the low interest rate policies could feed a global currency war. What is your view on this?
I guess our take would be vive la currency war. I think there are going to be a number of unknown consequences or unforeseeable consequences from what effectively is almost like sort of worldwide adoption of ZIRP, sort of zero interest rate policies, internationally. One of those, I think, the one that's most potentially alarming is the degree to which businesses are going to be prone to, well, not just businesses, but businesses and investors are going to be prone to malinvestment on the basis that the interest rates are being kept at artificially low levels. In other words, if we had a slightly more normalized environment, interest rates really ought to be quite a bit higher than where they are today. So the impact of that evidently is going to be that you're going to see ongoing volatility across currencies. And at a time when most of the Western economies, particularly Europe and the UK, are sort of desperately looking for growth, one way that they're evidently going to try and find that growth is in currency devaluation. So yeah, we're absolutely believers in the sort of currency war thesis, but in light of the kind of data that we're getting out, and we've just had the Case-Shiller home prices have just come out, and they're again moving in the right direction. The dollar is likely to be a continued beneficiary of that trend, notwithstanding the fact that you've got Ben Bernanke printing currency as fast as he can.
More positive sentiment for the US has been from the housing market. Do you think this housing uptick that we've seen for the last 6 months will last? And how much will this help to boost the economy?
In terms of the economic effect, not easy to state. What I think you're definitely seeing though is the positive impact of what happens in the economy when you allow housing prices to clear. So unlike take the local market here, unlike the UK, where the government's doing everything it possibly can to keep overvalued property prices at overvalued levels, which makes it effectively almost impossible for first-time buyers to get on the ladder. At least you had some sort of clearing process, some clearing mechanism in the States. So the fact that housing it seems to be bouncing back, I think you'd have to view that as a good thing. Is it sustainable? Who knows? But the bottom line is you at least had something approximating to a free market and therefore a recovery in housing in the US.
Lastly, let's talk about the dollar. Do you think the currency is set to continue to strengthen? Will this have a knock-on effect to the financial system?
I think certainly our take would be that the US dollar is likely to strengthen against the other major currencies of the world. Because you're getting slightly better or demonstrably better, stronger economic data coming out of the States, again in relation to what you're seeing in Western Europe. And also, of course, we've just had a fairly chaotic bailout in the context of Cyprus over the last week or so. And the implications of the Cyprus bailout are that investors across periphery Europe are going to be looking long and hard at where they want to keep their currency, in what banks they want to keep their currency, and ultimately what currency they want to have. So given that the Eurozone, this sort of long emergency in the Eurozone is going to persist, you have to assume that global investors are going to favour the dollar over, say, most other alternatives. So we think dollar strength is set to continue. On that basis, it's probably a net positive to the financial system as a whole.
That was Tim Price from PFP Wealth Management on US Data. Keep clicked to Dukascopy TV for all the latest updates. Goodbye.